Banking is a fundamental pillar of modern economies, playing a pivotal role in facilitating financial transactions, channeling funds from savers to borrowers, and fostering economic growth. It encompasses a wide range of financial services and activities conducted by banks, which are financial intermediaries that connect those with surplus funds to those in need of capital. These institutions are at the heart of the financial system, serving individuals, businesses, and governments alike. In this comprehensive exploration of banking, we will delve into its history, functions, types of banks, regulatory framework, and evolving landscape. Singho Historical evolution of banking. Singho Banking has a rich history dating back thousands of years. Its origins can be traced to ancient civilizations, such as Mesopotamia, where temples served as repositories for valuables and provided loans to farmers. The concept of banking evolved in different forms in ancient Greece, Rome, and China, eventually taking root in medieval Europe with the emergence of Italian and German merchant banks. The modern banking system began to take shape during the Renaissance period when banking houses, like the Medici Bank, pioneered many of the practices we see in contemporary banking. The Bank of England, founded in 1694, is often considered one of the world's first central banks. These early institutions laid the foundation for the complex financial system we have today. Singho functions of banking. Singho Banks perform several vital functions within the economy, including Singho intermediation. Singho banks act as intermediaries between depositors, those with surplus funds, and borrowers, those in need of funds. They collect deposits from individuals and institutions, and provide loans to businesses and individuals, thereby facilitating the flow of capital. Singho payment services. Singho banks provide a secure and efficient means for making payments, including checks, electronic funds transfers, and credit debit card transactions. These services are essential for the functioning of the economy. Singho safekeeping of deposits. Singho banks offer a safe place for individuals and businesses to store their money. Deposits are insured up to a certain limit, ensuring the safety of funds. Singho credit provision. Singho banks extend credit to borrowers, enabling them to finance various needs, from buying a home to starting a business. This credit allocation is a critical driver of economic growth. Singho currency issuance. Singho central banks, often closely linked to the banking system, have the authority to issue and regulate the supply of a nation's currency. Singho types of banks. Singho. There are various types of banks, each serving specific functions within the financial system. Singho commercial banks. Singho these are the most common type of banks, catering to individuals and businesses. They offer a wide range of services, including savings and checking accounts, loans, and investment products. Singho investment banks. Singho investment banks specialize in providing financial advisory, underwriting, and trading services to corporations and governments. They play a crucial role in capital markets and mergers and acquisitions. Singho central banks. Singho central banks are responsible for regulating and overseeing the monetary system of a country. They control the money supply, set interest rates, and often act as lenders of last resort. Singho retail banks. Singho retail banks focus on serving individual customers, offering basic banking services like savings accounts, loans, and mortgages. Singho online banks. Singho these banks operate exclusively online, providing digital banking services without physical branches. They often offer competitive interest rates and lower fees. Singho community banks. Singho community banks are smaller institutions that serve specific local communities or regions. They emphasize personalized service and community involvement. 七、星號savings and loan associations. 星號 These institutions specialize in providing mortgages and other real estate-related financial services. 星號 regulatory framework. 星號 Banking is a highly regulated industry due to its critical role in the economy and the potential for systemic risk. Regulatory bodies vary by country, but often include central banks and government agencies responsible for ensuring the stability and integrity of the banking system. Key regulations include: 1. 星號 prudential regulations. 星號 These focus on the financial health and stability of banks, requiring them to maintain adequate capital, manage risk effectively, and meet liquidity requirements. 2. 星號 consumer protection regulations. 星號 These regulations aim to protect consumers from unfair practices and ensure transparency in banking transactions. 3. 星號 anti-money laundering, AML, and know your customer, KYC, regulations. 星號 These measures help prevent financial institutions from being used for illegal activities, such as money laundering and terrorist financing. 4. 星號 interest rate regulation. 星號 In some countries, central banks set benchmark interest rates to influence monetary policy and control inflation. 5. 星號 banking supervision. 星號 regulatory agencies conduct regular examinations and audits of banks to ensure compliance with rules and regulations. 星號 evolving landscape. 星號The banking industry is continually evolving, driven by technological advancements and changing consumer preferences. Digitalization has led to the emergence of online and mobile banking, enabling customers to access financial services conveniently from their devices. Fintech companies are disrupting traditional banking by offering innovative solutions in payments, lending, and investment. Blockchain technology and cryptocurrencies have also gained prominence, potentially reshaping the future of banking and finance. These developments bring both opportunities and challenges, such as the need for enhanced cybersecurity and regulatory adaptation. In conclusion, banking is a cornerstone of modern economies, serving as a conduit for capital, a provider of essential financial services, and a stabilizing force through regulation. Its history is a testament to human ingenuity and adaptability, and its future promises to be shaped by technology and innovation, ushering in a new era of banking. Whether through traditional brick-and-mortar banks or the latest digital platforms, banking remains an indispensable element of our economic lives.